Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss who is driving voter turnout and the issues they are motivated by. And Phil, it's quite incredible. More than 86 million Americans have cast ballots going into the weekend. It's quite incredible.
Yeah, and thankfully there's a lot of places where you can go to vote early and relatively safely, given that coronavirus is still out there and it's infecting a lot of the hot election spots too. So what we're seeing, if you read the data, is there's a lot of young millennials voting, potentially for the first time. And so that might change the way the demographics work. I know that if you look at the election odds, the odds really haven't changed for who's going to win the presidency throughout the whole of October. And that sort of speaks to the fact that although it's a little bit one-sided, it hasn't kind of closed the race down. I think there's still a lot of pollsters that worry that whatever their sort of random selection techniques are might still get it wrong, just like we saw 4 years ago when everyone thought that Hillary was a lock, and it turned out that she didn't actually have enough votes to get the nomination.
So when we take a look at a prediction for a blue sweep, meaning that they'll get the White House, House, and Senate, what are predicted odds showing there?
I mean, it had gone from less than 50% up to around about 60%, and now it's come not right back down. It's just slightly above 50%, but on a lot more trading activity. And that usually means, if there's a lot more people willing to make a bet on that, there's a bigger group think. And so it's kind of tight. It's not clear at all that we're going to have all three of the segments of government being Democrat run come next week or next year, whenever we find this out.
All right, and then let's actually go back and review October, because that certainly was a month to remember for sure, as markets are trying to jockey with what this is going to look like, and not even just getting through November 3rd, but any potential aftermath.
Yeah, so we kind of know that elections typically have a little bit of volatility before them, and then you get the election day, you get some certainty, and the volatility tends to go away. But this year is different for a couple of reasons. Obviously, underneath everything that's going on with the election is coronavirus, and that's probably going to be around for 6 more months. So volatility has been elevated for months because of that. But if you look at the volatility curve, it looks like the options markets are pricing in a little bit of election uncertainty, not just through tomorrow, but for maybe another month if we have a contested election. And we obviously had a contested election back in 2000, and we saw that the volatility actually remained elevated for the weeks it took until that was resolved. So it's not that surprising, given that we've got a lot more uncertainty in the last few weeks, that we've had a tough October. But it's also because we've had the coronavirus cases explode in Europe, starting to increase in the US. We've seen hospitalizations increasing in the US. So as we head into winter, it became clearer that it was going to be tough to keep all the businesses that we had got open throughout winter. And I think that's not good for the economy either.
Well, if we take a look at GDP reading as well, how does that compare to what we saw in 2008, the Great Recession, versus what we're looking at right now?
I mean, that's a super interesting question, because everyone's talking about the V-shaped recovery, and everyone was kind of tapping themselves on the back for the rebound we saw in GDP last week, which was super strong. It's a record rebound, but from a record drawdown. And we all remember back in March, 50% of workers were told to stay home and quarantine. Lots of businesses shut down, at least for a short period. So where we've come back to is still down pretty badly. Not as badly as Europe, but not nearly as we haven't done as nearly as well in 6 months as Asia. And so we're pretty much in line with the bottom of the Great Recession in 2008. It's not nearly as positive as you would think. If we have headwinds from here on, you could see a recovery path that looks pretty much like the Great Recession. So, that Nike swoosh where it picks up early and then sort of slowly gets back to the old normal. And that's starting to look a little bit more like where we might end up heading.
And if you take a look at our next chart here, we can see that the numbers are spiking significantly with COVID-19 heading into the winter.
Yeah, and the hospitalization numbers are starting to increase now. We kind of know from the last time we looked at all of this that the cases spike first, and then the hospitalizations come a couple of weeks later, and then the death rate increases sort of 4 weeks later. And so we're already seeing the hospitalizations start to increase pretty significantly. We had 97,000 new cases late last week, which was phenomenal in the US, and Europe's having even more. So there's definitely a second wave of coronavirus coming through the States as we're all locked down for winter.
Right. And of course, the fallout all falls on the lap of small business, unfortunately.
Yeah, and we've already sort of seen that small businesses probably hit the hardest. I mean, the earlier chart we were looking at with the relative performance, large cap stocks have done much better than small cap. Growth stocks have done better than value stocks. But when you look at the small business data, a lot of small businesses are still shut down, and the trend is probably not helping at the moment. There's a few more of them shut down now than a couple of months ago. And faced with that, you look at a lot of the data that shows in the regions where cases start to spike, businesses shut down. And there's a chart we're looking at today, just looking at people eating out has declined in Minnesota area as the cases of COVID have increased because people don't want to be exposed to people that are potentially contagious. And so they're acting whether or not the policies are to be locked down or not.
All right, Phil, thanks for joining us on Trade Talks. Looking forward to tomorrow's Election Day coverage.
Be an interesting day. Thanks.
All right, you got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.